Student loan payments have restarted. Is that going to cause a hit to the economy? I've got that and more coming up. My name's Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. The economy and our daily lives are intertwined. There's, what you do and how you spend your money and how you're doing financially. It impacts the economy. Now, each of us probably just a raindrop in the ocean, but collectively we create waves. And that's sort of if the consumer accounts for 70% of GDP, how is the consumer doing and what things are shaping their finances? And for 3.5 years, since the middle of March of 2020, anyone that had student loans, 40 million borrowers, didn't have to pay on them. There was no interest collecting or accruing, and no payments were due. And that made sense at the time, and I'm not justifying, but if people weren't able to work and they didn't have that income coming in to pause those payments, I can understand that. But as people went back to work, as income grew, as inflation reigned, and there were job openings that far surpassed people's the number of people looking for work, we continued to delay having those payments restart. And I know that was with a certain end objective by some politicians, but here we are, well past the COVID event and that significant unemployment, and these payments are now restarting. Will that have a ripple effect on the economy? If people, let's just say on average, have to pay a $200 monthly student loan payment, if that $200 is going to the student loan to pay on debt, then that $200 cannot also go to Amazon. It can't also go to Walmart. It can't go to the next vacation. It can't go to holiday expenses, something like that. And the fact that those dollars will need to go towards a loan payment instead of to other businesses or to consumption means it likely could culminate into a significant and meaningful drop in the economy and economic activity. Again, if 70% of GDP is based on consumption, consumer spending, and 40 million people are now needing to restart paying on their student loans instead of having those dollars go elsewhere in the economy or be spent, absolutely that can add up and make a hit, take a hit at an economic level. To me, coming into 2023, pretty much all economists were expecting a recession. There was a article posted or reposted just last week that shared, I'm not going to say which bank, but it said that there is now a 100% certainty that we're going to see a recession within the next 12 months. Well, that was 12 months ago, and we haven't seen it. So pretty much every economic expert said we'll see a recession early in 2023, not going to be good, then things will recover in late second half of 2023, and 2024 will be much better because we'll have endured some pain. And that expectation was, well, you can't fight the Fed, and what the Fed has been doing is raising rates, trying to slow down the economy and slow down consumption. If they can raise rates and slow down consumption, then there'll be less dollars chasing after too few goods and bidding up prices. We'll see inflation come down. Yes, it will come with a little recession, but that's the medicine that we need. I'm oversimplifying, but that's the premise. Well, here's the deal. Yes, they've raised interest rates significantly, and while at an individual level that impacts each of us a little bit differently, at a macro level, when you're looking at the ocean, all of those individual raindrops, that raising interest rates hasn't impacted most people. Why? Because most people haven't purchased a new home and seeing a really high interest rate. Yes, the average interest rate on a new vehicle is now over 8%, but there haven't been as many of those either. And so a lot of individuals and businesses have sort of been insulated from these rising interest rates because they've just sort of held their breath, or I'm just going to not move right now, or I'm not going to take out a loan right now. Well, as time goes on and these interest rates stay high, in aggregate, we're only able to hold our breath for so long. At some point, capitulation's going to take in, or a move will be necessitated, or in this case, well, given enough time, now student loans have to restart. Or take a different angle at that. Well, people have been borrowing more and more. We have record levels of credit card debt. Again, that I'm not impressed by that record level. Prices go up, things cost more, and inevitably, credit card levels will be higher because everything costs more. But what stands out is now the average interest rate on credit cards is over 21%. Since they've been tracking interest rates on credit card, this is the highest number ever. Different surveys have shown different things. However, based on one survey by a notable institution, there are now more people that are unable to pay their credit card bill off every month than the ones that do. So more people are having their balance roll over to the next month, basically having to pay interest, than people that use their credit card but pay it off every single month. And so is this sort of the beginning of where, well, the consumer is sort of getting pinched, and all of these monetary measures to slow down the economy and slow down consumption, is it finally starting to take hold? I think it's possible. I think it's possible. When student loans payments starting, record high credit card debt, inflation still high, interest rates still high and have been higher for longer. We also have, I did a video on this recently, but that the excess savings built up during the pandemic have essentially been depleted. I think all of this is applying pressure to the consumer, and if consumption takes up and makes up 70% of GDP, I think over the next 6 to 12 months, it'll be very interesting to see if we do see that slowdown and that recession everyone's been predicting. So what are the takeaways here? At a macro level, I think the odds are, even though a year ago everyone, the economists were saying with 100% certainty we'll see the recession, it's possible it's been delayed as opposed to avoided. If that's the case, be watchful for that and make sure that your own financial house is in order. And that's sort of the second takeaway, taking it down to a more kind of individual, each of us, how does this apply? And one is, if student loan payments have restarted for you, then I've done a few videos on this, but I would make sure that you've recalibrated your budget and you've taken a look to see, well, what adjustments do you need to make in your own monthly expenses to make sure that you can manage the restart of these student loan payments without having to dig a financial hole for yourself or move things off balance. To think that, well, I'll just continue to live the way I have been living and I'll restart my student loan payments. I'm too much of a geek. I would want you to map that out financially to see what the trade-off needs to be in order to make that fit. If you tried that and financially the student loans just don't fit, I would go into the studentaid.gov and I would look at the income-based repayment plan. The government's just rolling out a new income-based repayment plan called SAVE, which solves some of the challenges from the previous income-based repayment plan. So if you've crunched the numbers and you've looked and said, financially, the student loan payment just doesn't fit, I would go there and make sure that you're on the right income-based repayment plan and have applied for the new SAVE income-based repayment plan. And then for everyone else, I would want to make sure that your financial house is in order, that you've taken a look and that you've said, well, if we do see a recession come at some point in the next 6 to 12 months, are you financially ready? Do you have the right budget in place? Have you been saving up for known upcoming expenses, that delayed spending? Do you have the right emergency fund funded? Have you been managing your credit card balance levels so that you're not having that, just like the population is seeing more and more, where these credit card balances are not being able to be paid off every single month? Do you have that under control, and have you been paying down debt and managing those debt levels for you? How do you make sure that your financial situation is recession ready? Work with your certified financial planner on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or send us an email, info@korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.